Hello everyone, welcome to Atomic ACCA's exam solving series, and in this video we are going to look at question number 2 from section A for the SBR pre-mock exam for June 2025 session. So let's begin. We'll just read this. Oops, where did I go? Okay. Gillam company constructs commercial property which it either sells or holds to lease out to tenants. Financial statements are prepared in accordance with IFRS accounting standards. It has a financial year end of 31st December X7. So either sells or hold give to tenants commercial property. Following exhibits, left hand side, sale and leaseback, internal email. Okay, fine. Probably internal email is about something that ethical issue, because question number 2 will have some ethical issue which is like story writing. So we'll see how to do that. First things first, we'll take the requirements and copy paste it down. Control C, Control V, and we can just close this thing. Then we have 8 marks over here, and we have 10 marks and 2 marks, so that's like 12 marks over here. We can just bold it up to see we have question over here. All right, so we have the things here. Let's see. Using exhibit 1, explain with supporting calculation, again like previous one, how the sale and leaseback arrangement should be accounted for the year ended 31st December X7. So roughly speaking, explain with supporting calculation. So we can say maybe around 3 to 4 marks for numbers, then around 4 marks for discussion, something around that. Okay, we're going to use the same technique we did previously. We're going to do the number works first, then work it backwards. Since we have the spreadsheet, we can utilize this for our answers. So I'll just write over here. We're going to deal with answer number A over here. So we're going to do the number work here, then we're going to work it backwards, do the technical part, get the scores for that. So sale and leaseback is here. What was the year ending again? Year ending is 31st December X7. Okay, fine. One of Gillam's investment properties west side, which it leases to tenants. Gillam built this property 2 years ago following the sustainable building guidelines recommended by the government. Subsequently, Gillam has not followed these guidelines in its new construction project due to the cost of applying them. Okay, so you initially followed some guidelines from the government. After that, you are not following it anymore because it is too costly to follow. Okay, fine. Killam applies the fair value model to investment property, which means no depreciation will be there. At the end of the year, you have to shift to fair value. In its interim statement of financial position at 30th June 20x7, the year end was 31st December, so 30th June means mid year. The carrying amount of the West Side Tower was equivalent to its fair value of 20 million. So carrying value equals to fair value. Fair value was unchanged at 31st December X7. So by the year end also it is 20 million. Okay. On 31st December 20x7, that is at the year end, Gillam entered into a sale and leaseback arrangement. Okay, so from here is where our story is beginning. Just so far we had only information about the fair value and carrying value at year end. Gillam entered into a sale and leaseback arrangement in relation to West Side in order to realize cash to fund a new construction project. So when you sell it, you get money. Then when you lease it back, you have the asset with you and you have some fund also with you. Then the transfer of West Side met the criteria in IFRS 15 to be a sale. So it is a sale and leaseback where sale is meeting. So you know from the technical points we have situations where sale and leaseback is happening, where sale and leaseback is happening, but sale is not happening as per IFRS 15. And you know the accounting treatments are different in both. So here sale is happening. So this is generally like that five entries thing. And under the terms of sale and leaseback arrangement, Westside was sold for 22 million and immediately leased back for a term of 10 years. Payments are made in advance and commenced on 31st December X7. So you sold and leased it back around that same day itself. You're leasing it back for 10 years now, and it was sold for 22 million. Okay. Lease payments are 1.25 million per year if stated carbon emission targets are met in the previous 12-month period. Okay. If the targets are not met, an additional 0.15 million must be paid each year, making the total annual lease payments to be 1.40 million. Okay. So if some targets are met, it will be 1.25 million. If the target is not met, it will be 1.4 million. So that 0.15 million is like a variable lease payment. Maybe you'll pay, maybe you'll not pay. So for our calculation to find present value as per IFRS 16 says that Only the fixed elements you have to consider. Variable elements you don't have to consider. If in case you are ending up paying it, that is to be recorded simply like an expense in your books. Then these targets were not met in the year ended 31st December X7, which means you end up paying 1.40 million. Then that is okay. Information following information is relevant. If lease payments are 1.25 million per year, implicit rate is 4%. Present value of future lease payment after the first payment, because I told that lease payments are made in advanced and it's commencing on 31st December X7. So at the very beginning, 9.30 million plus whatever lease rental you're paying in the beginning, advanced. How much you're paying? They told the targets are not met. So initially you would have paid that 1.40 million. But again, no. This is if in case lease payments are 1.25. So 9.30 plus 1.25 will be that beginning figure, whatever that original lease liability was there. Then if in case lease payments are 1.4 million, then this would be the figure plus 1.4 will be the original lease liability at the beginning. So hope all the numbers are clear over here, and that is the only information we have. Considering where do we start the number work with? This is a sale and leaseback where sale is happening. That means we have to follow that 5 entries. What are the 5 entries we have to follow? This is sale and leaseback where sale is happening. So what 5 entries we have to pass? We have to pass debit cash, the money we got, credit the investment property, the property that we lost, I mean we sold basically, credit the gain we made on sale, gain on transfer. Then once the asset goes out, we are leasing it back, so it's a IFRS 16 now. So we have to debit ROU and we have to credit lease liability. So this is the overall story we have. I mean, this is the entries we have to focus on. Now, what is the cash received in this? That is straightforward. We'll just write the debit column over here. Oops. Debit column, credit column. Okay. First thing, how much is the cash received? It was told somewhere over here. West Side was sold for 22 million and immediately leased back for 10 years. So lease time period is 10 years. Just for reference, I'll write over there. And all this, I'll take it down. Okay. So debit cash, I'm getting 22 million. That was straightforward. How about investment property? What we have to remove? We have to remove the carrying value of the investment property. What is the carrying value at the end? We had some carrying value and fair value information in this paragraph. They're telling that carrying value on 30th June was 20 million, which is equal to fair value. So 30th June carrying value is 20 million, fair value is 20 million. What will be the carrying value at the year end? Do we have to do some depreciation? No. We have to just keep it as it is because investment property is following fair value model. That means by the year end, carrying value is standing at 20 million. How about fair value? They're telling that it is unchanged at 31st December X7. So we'll just take these numbers over here. Carrying value is equal to 20 million. Fair value is also equal to 20 million. Sale price is 22 million. So we have a concept within this IFRS 16 leases, that is when you are doing a sale and leaseback, and if in case the money that you're getting is in excess of your existing fair value, whatever is that excess money that you get, this is like a finance for you, meaning like a loan for you. So whatever excess figure is there beyond fair value, treat it like a loan separately. That means this 22 million now I can separate to two things: 20 million for the sale that is happening, 2 million for the loan that I'm getting. So in that case, if I split this thing, it will be like 20 million is the sales price and I'm getting a loan of 2 million. Sorted. So what was the carrying value of the investment property that is going down? 20 million. Related to the sale, how much cash am I getting? 20 million. So where did the 2 million go? 2 million, I'm going to treat it like a loan. 2 million excess accounted for like a loan or like a financial liability basically. So what am I going to pass? I'm going to simply pass the entry Debit cash, I got 2 million, and credit loan or credit liability 2 million. So that is very straightforward. So altogether, how much money I got? 20 and 2 million. Now, this story is finished over here. Now let's focus on this story. What's happening? Cash, I got 20 million. Asset was 20 million. That means, did I make any profit over here? No. Gain on transfer is equal to 0. You either can get into the conclusion that gain is 0 like this, or else we know the formula to find out the gain. That is total profit. We have the 3-step model. First we find the total profit. How do we find the total profit? It will be equal to sales price minus carrying value. What is the sales price over here? 20 million. What is the carrying value over here? 20 million. 20 minus 20 is 0. So total profit is 0. So out of that there is nothing to deduct. That is why this gain on transfer becomes 0. So hope that is clear. Next thing, debit ROU and credit lease liability. What is going to be the ROU? ROU will be equal to, we have a formula for that. ROU is equal to carrying value multiplied by present value of the liability divided by the fair value. What is carrying value? 20 million. What is present value of liability? We didn't find out yet. What is fair value? Fair value is 20 million. Now 20 is there in the numerator, 20 is there in the denominator. These two things will cancel out, which means what is ROU? ROU will be equal to the present value of lease liability. That means whatever present value of liability I am going to get in the lease liability part, same thing will be there in the ROU as well. So these numbers are going to be the same. Now I have to find out what is that same number. Okay. What are the numbers over here? Either we are going to have a lease payment of 1.25 million or we have to have a 1.4 million. What out of this we will have? We have a fixed payment. I told this point earlier as well. In the IFRS 16 concept, you have to look out for fixed lease payments to find out what is your lease liability. Anything in excess, if in case you're paying, that's simply an expense for you. That means I have to consider it on the basis of 9.30 million. What is 9.30 million? It is the liability after clearing the first payment. What would have been the first payment if it's 9.30 million? It would have been 1.25 million. So what is my existing original liability? 9.30 plus 1.25. So I'm going to write it over here. Present value of liability, I'll just write over here. Present value is equal to 9.35 plus, what is it? 1.25. That is equal to 10.6 million. 9.35, right? Or 9.30? 9.30 million. So 10.55 million. So 10.55 million will be my present value of lease liability. What is it? 10.55 will be the lease liability. That means my ROU will also be equal to 10.55 million. So my debit column has 20 and 10.5. My credit column has 20 and 10.5. Here debit has 2 million, credit has 2 million. Sorted. What happens after this? After this, on day one itself, advance lease it is. So first itself, you are going to pay some amount of lease rental. How much lease rental are you paying? They told over here that the conditions were not met. That is, target is not met. If target is not met, that means how much you'll have to pay? You'll have to pay 1.4 million. But what related to this is your lease liability? Only 1.25 million. So what is this 0.15 million? Extra expense. How do we account for this? Subsequently, I'll just, how do I get some lines over here? Okay, let me just pull all of this to the side. Okay, subsequently, you're paying 1.4 million. So credit cash 1.4 million. Okay, out of this, how much is your liability? 1.25 million. So debit lease liability goes down by 1.25 million. So what is remaining now? 0.15 million. What is this 0.5 million? Debit expense to SOPL. This will be the subsequent entry that happens with the lease liability. So we have what is the initial entry, we have the subsequent entry, we have the entries for the 2 million figure, extra cash. What else is there? Sorted. This is the calculation we have. Now what we have to do? This thing I have to make into words. So no other numbers are there, right? Nothing else is it. If you think that, oh, I have to do ROU depreciation, I have to find the finance cost after this. If you're thinking all of these things, remember this is an advance lease. Okay. When is this lease starting? Sale happened and commenced on 31st December X7. What is the question asking for? Where is that? This thing, word processor. Where is the question asking for? How should this arrangement be treated in the accounting for 31st December X7? Which means they want the story on day one of that lease. You don't want to say what happens in 31st December 20 exit. ROU depreciation will be there then in the next year. Lease liability will have finance cost and all the crap coming on top of that going down. All these things will be there. Where will that be? In the next financial statements. So this financial statement, only this entry, what happens on day one will be there. After that, what happens, don't think of that, because that's going to simply take away your time. This is how a simple date can end up taking a lot of your time. So be very careful when reading the requirement and doing the calculations. Cool. So let's start making stories out of these numbers. Let's close this thing. Let's get the spreadsheet. Where is it? Okay. So first thing we can tell. Okay, something I can that I didn't mention in the previous question. It's not necessary. The examiner will definitely understand that you're not bringing numbers out of air. You definitely have to do the calculations. But just to be a little formal in your things, whenever you're basing your writing related to some numbers that you've written in the Excel sheet, just write over there, refer spreadsheet for numbers or refer spreadsheet for calculation. It's a by default assumption that examiner will definitely go and check there, but just part of formality. Cool. Now let's start writing the answer. What is it? In the sale and lease back of west side project, it's not project, what is it? West side investment property. Okay. So in the sale and lease back of west side investment property, as control is passed on the sale, it can be said that as per IFRS 15 it meets the criteria for sale. Hence, as per IFRS 16, that is leases. If you don't know the lease standard, just say that as per lease accounting standard. Hence, as per IFRS 16, this needs to be accounted for using the 5 entries, where what is the 5 entry summary? Basically, you're going to remove the asset from your books and record an ROU and lease liability. 5 entries where the investment property is removed from the books and instead a right of use and lease liability will be recorded. So this is like the base summary for that 5 entries. Okay. Now we have to go one by one with the case study, what all we did with the numbers. So let's write over here. What we have over here? Cash. Now that's a straightforward statement we have in the case study. So I don't have to write over here. Since we got cash, this will be debited into cash account. That would be like too stupid basic sentence to write. So that would be unnecessary over here. We don't have to write. Let's think a little advanced. What was the next thing we did with the cash? How did this become 20 million? We splitted that 22 into 2 and 20 and 2. Why did we do the split? Because there was a rule as per IFRS 16 that if money we get is greater than fair value, we have to do the split. What do we have to do the split? That 20 million will be accounted for under the 5 entries for lease, sorry, sale and lease back. And the other 2 entries, other 2 million, we have to account it for like a loan. Now that is a little advanced concept that we can write. So As per IFRS 16, so first we are talking about the technical part. As per IFRS 16, in a sale and leaseback arrangement, if the cash received is greater than, or you can write if the sale price is greater than fair value, that is also fine. If the cash received is greater than fair value of fair value of the asset, then the extra money received is to be treated like a financial liability, or you can just simply say like a loan. Okay, hence the 22 million cash received. So by this small statement we have told that cash received is 22 million. So hence the 22 million cash received is split to 20 million to be used for sale and leaseback entries. I'm just writing for reference the 5 entries, and the 2 million is recorded like a loan. Now you don't have to mention the entries over there, that's already there. Okay, that's why I said refer to the Excel sheet if you want to. So 2 million recorded like a loan. Khalas. So first story is over. What after this happened? Investment property. How did I get the carrying value as 20 million? Why didn't I do a depreciation? Because it was fair value model for investment property. I'm going to write the technical part for that. As per IAS 40, if I don't know, I'm just going to say accounting standard related to investment property. So as per IAS 40, uh, when investment properties are held under fair value model, no depreciation shall be recorded for it. Rather, only fair value shift happens at the reporting date. Hence, the carrying value of west side remains at 20 million itself at year end, which must be removed from the books on sale. So we explained how did that credit investment property 20 million come up. Next thing, why is why is gain on transfer turning out to be zero? As the carrying value and fair value, as the carrying value, fair value and sale price related, as carrying value, fair value and sales price related to the sale and lease back arrangement of west side, as carrying value side is at 20 million, there is no gain on this transfer to be recorded. So we explained what is that zero. How did we find ROU? ROU was equal to lease liability. Now we can just explain how did we get to the ROU. Right of use asset is recorded using the formula carrying value multiplied by present value of liability divided by fair value. As carrying value and fair value is same, this gets cancelled out, causing present value of liability being equal to right of use asset. So until that point, we didn't find what was the right of use asset. We just found out that that's equal to present value. Remember earlier, before writing 10.55, I just wrote PV and kept over there. So we are at that stage in the explanation. After this, how did I get the lease liability? As per IFRS 16, no, lease liability, as per IFRS 16, lease liability is to be calculated based on the present value of fixed lease payments without considering the variable lease payments. Now let's explain what is fixed and variable within this scenario. The 1.25 million lease payment is a compulsory figure regardless of meeting the carbon emission target, while the additional 0.15 million is variable lease payment to be paid if targets not met. Hence, we must consider the fair no present value of liability based on the lease rentals as 1.25 million. The given figure, how much was it? We just added something over here, right? Where was it? Given figure was 9.30. We added 1.25. The given the given present value of lease liability of 9.30 million. It's preferable to write everywhere the dollar sign. Okay, I kind of missed out writing the dollar sign everywhere, but since no other numbers are there, it's quite understandable. But yeah, again, keeping that formality and professionalism, try using that dollar sign. It's not that if you don't use it you'll lose all the marks or anything, but that professionalism, just maintain it. So anyway, since I'm not writing it, I'm just continuing the same way. The given present value of lease liability of 9.30 million is after the initial payment of 1.25 million. Hence, on adding this figure back, original lease liability turns out to be 10.55 million, which also will be the ROU, because once we got that number, we filled in for present value of liability and ROU. Now we're done with the 5 entries. After this, what we did? We did the subsequent entry about that extra 0.15 million. Subsequently, as the conditions, no, as the targets are not met, this will cause, what is the company's name? This will cause Gillam Co. This will cause Gillam Co to pay a lease rental of 1.4 million. Out of this, 1.25 million will be reduced from lease liability, while 0.15 million will be charged to SOPL. So what we did, we just explained what is this entry we did over here. Now when we explain, is it mandatory that now you have to reduce credit entry to cash? I didn't write over there. That is like, by default understood. You're paying something, so you have to focus on the main concept over here. So when I'm saying this technique to write, don't follow it like word by word, like the setting. Oh, we wrote debit, credit. So you have to write about all sentences over there. Not like that. Just use some judgments also from your end to see what is some important content to be written, because if you explain each and every line over there, sometimes you can end up overwriting, where you're not going to lose any marks, but you're going to lose time. So you have to be a little judgmental about what is actually necessary to be written over there and what is not really necessary to be written over there. What you can connect to some accounting standards, what you can connect to the technical part to write it. Okay, so hope you have understood what to filter out when writing, how we filtered out writing this debit cash, how we filtered out writing this credit cash. So hope all that is sorted and hope you have followed with that. So with that, we are done with this number work over here, and we are also done with that first part of the question. How much marks was it? 8 marks, something like that. So 8 marks. So hope that was clear and how we did that question. Now let's do the next part of the question. Using exhibits 1 and 2, discuss ethical issues arising from Bimel's instruction to Shammi and explain how Shammi should proceed. I think the ACCA people are quite interested in South Indian movies. Too much references. Okay. So 10 marks and 2 professional marks is there. Okay, whatever. Let's see the internal mail. Bimel, the finance director of Gillam, is ACCA qualified. He has just returned to work after an extended period of leave. He has sent the following email to Shami, the finance manager. Okay, so finance director was on leave, then he came back, he sent some email. Shami, okay. In respect of the sale and leaseback arrangement, I think we should assume that missing the emission targets in 20x7 was unusual. And since West Side was constructed in accordance with sustainable building guidelines, target is highly likely to be met in all other years. Now, about the sustainable building guideline we've seen in the first paragraph over here. 2 years ago, West Side was made according to sustainable building guideline. Subsequently, they have not been following the guidelines due to the cost of applying them, which means if they're not following the guidelines, there are high chances that after this also they are going to not meet the targets. So the point they are trying to bring here, that it was unusual, is not exactly unusual. This is going to be a usual thing in the coming future. So we can bring up one point over there. Then the target is highly likely to be met in all other years. No, false statement, not going to happen. I believe that meeting this highly likely threshold means that you should recognize the lease liability based on future lease payment of 1.25 million rather than 1.4 million. That we already told in the last question, that it is supposed to be on 1.25 million and not 1.4 million. But it is not because that meeting this highly likely threshold means, no, it's not based on meaning whether they meet the condition or not. It is based on the role that IFRS 16 themselves is telling. You have to focus on the fixed payments and not on the variable payments. So that is a lack in professional competence for this guy. He doesn't know, he's just looking at the chance of payment and figuring out. So he could have said that if in case we are highly likely to not meet the targets, then do it on basis of 1.4 million. Still, that is a wrong thing. Then this will keep Gillam's finance cost to the minimum possible. So they're trying to understate expenses. Biased objectivity is a problem, and help to ensure that the debt service covenants put in place by the bank are met. So there are some covenants put by the bank, some conditions are there, maybe like performance targets could be there. They're trying to understate expenses for this thing, which means there are high chances that there are other things they're doing in the company as well, potentially that could lead to improving the performance from on the books at least. So that could also be an indicator that some other manipulations in accounting could be happening. Considering that he himself is the finance director as well, it's a very high possibility he is a fraud. Then also, when you draft Gillam's sustainability disclosures, there won't be much to write about at all. Why not? So he's trying to understate the disclosures as well. I think that most of the content, why is he thinking everything? I believe I think that most of the content should focus on the fact that Gillam applies sustainable building practices. It's already mentioned earlier that they are not following that. They are not following these sustainable practices. So if you're going and disclosing that they are following sustainable practices, you're giving misleading information to the user of financial statement. So you're giving false information. That means you're not sticking on to, you're being, what do you say? Integrity is not there, not straightforward. You're doing professionalism is not there. As a result, they can access cheaper finance. So they're just trying to improve, expand the business by fooling around with people. So they're trying to fool the user in the first place. Now they're trying to access cheaper finance, which means they're trying to fool the bank as well. So it is quite necessary that, okay, banks may have put that covenant because of that. So probably they're trying to fool the bank based on this. So again, that's all related. Shami is also an ACCA qualified accountant and keeps up to date with reporting regulations and requirements. She is concerned about the instructions given by BIML but is unsure what to do about it. Okay, so Shami is the victim over here. Okay, so now we have to start writing stories one by one. How do we frame it? It is 10 marks for the main discussion and 2 marks for professionalism. But we're just going to consider altogether. This is a 12-mark content. We need to write at least small paragraphs. Each paragraph we are aiming for maybe around 1.5 marks to 2 marks. Okay, maybe 1 to 1.5 marks. Let's keep it like that. So 12 marks, if we break it down, it is 6 clear points we need. But to be on the safer side, we're going to say we need 6 to 8 points. When we say points, each point we can try making it to like 1 to 2 sentences, that size of a paragraph. Okay, when I say paragraph, it's not like you have to write this much. one to two clear sentences. Sometimes one long sentence will be equal to the size of one paragraph. So when I say paragraph, don't think like there should be like 5 6 sentences. I'm just meaning that one clear concise point should be there in one area, and we're going to press the enter button, go to the next thing. So we're going to have at least 6 points, like 6 paragraphs over there, and we're going to try building contents over there. When we are going for ethics question, what is our things that we can use as the highlight point whenever we are going to think about things? We're going to look out for the threats, that ethical threats that we learned back in the audit paper, and we're going to look at the code of, what is it, ACCA code of conduct. What is ACCA code of conduct? POPIC, POPIC, professional behavior, objectivity, professional competence, integrity, confidentiality. And what is the ethical threats? FISA, familiarity threat, intimidation threat, self-interest threat, self-review threat. What was A? Advocacy threat. So we are going to look at these 10 things. Now it's not that all the 10 things will come in your answer, but these 10 things will be like a reference point for me. I'll try finding out from these 10 what all could be there, and then try building my points. Along with that, if something case specific is there, I'm going to take from that also. So this is what my ethical answering, ethical question answering model would look like. This is how I would brainstorm my idea. Cool. So let's start figuring out. We'll go line by line, and from each line we'll try figuring if it's anything related to that 10 item. Okay. Starting off with, this guy was on a leave. Now taking a leave is not a problem, so don't forcefully write something ethical problem telling that he is the finance director, so he should not be on leave. When he is on leave, that means the senior most board of director is not in the company. That means things will go, I mean, he's a human, he has to take a leave. So don't forcefully write some random stupid points. Read carefully and then build points. So that introduction is not of a concern for us. Let's start reading from the remaining things. In respect of the sale and leaseback arrangement, I think we should assume assume that missing targets in 2007 was unusual, and then meeting guidelines and things. Okay, so meeting guideline and this thing. So target is highly likely to be met in all other years. So this thing now we're going to expand. Okay, first thing, finance director Mr. Bimel claims that not meeting targets would be an unusual thing, as as Westside was constructed based on government guidelines. However, now we are going to oppose the point. However, due to the fact that meeting these guidelines are costly, what is the company's name? Gillam. Gillam Co. has not been Gillam Co. has not been following these guidelines subsequently. One point that was mentioned earlier was this west side was created 2 years ago following the guidelines. So maybe this finance director is telling situations from 2 years ago and assuming that that's going to be the same thing. So he's not clearly aware of what's happening with the company. So you can say that. Okay. Gillam Company. West side was created following the guidelines 2 years ago, and it can be understood that Bimel is using knowledge from 2 years ago to predict the future. This clearly shows that being at the board level, Bimel, or we can say finance director, is not clearly aware of the company's existing position or policies. Now, did we tell anything out of the 10 points exactly? We didn't tell that. But did we tell something negative over there? Yes, he's not aware of the existing policy. So first point number one to note: don't forcefully try writing professional behavior integrity and all if you don't know what it is. I didn't write over here for the same reason. I don't know which one to connect out of this, but I wrote the negative point. That's enough. So don't forcefully write that. I told that 10 points for reference, only for guideline, not necessary you have to connect to it. Second thing, I told when we started the discussion that paragraph need not have to be like this big size, but this paragraph turned out to be that big size. So I did wrong. Did I, divert the attention? No. When I'm telling something, also be careful. Don't follow as it is with each word. Here, I cannot reduce this paragraph size any smaller than this, because if I make it any smaller, the meaning will not be conveyed properly. So what I tried over here is conveying the meaning. I mentioned 2 points over here. First thing I mentioned was they're not meeting the guidelines because it is costly. Second thing I mentioned was they're taking information from 2 years ago. Both these things together I compiled and gave the conclusion that Mr. Bimal is not aware of what's happening with the company currently. So this paragraph could not only sometimes earn me that 1.5, it could earn me that full 2 marks from here. Cool. So this is how you have to, use some judgment also in your answers. Don't always go with the, planning. Sometimes plan has to be adjusted. Okay. Hope that was clear. Let's go to next one. I believe that meeting this highly unlikely threshold means that you could recognize the lease liability based on this one. Okay. So now we are going to talk about that 1.4 million he's telling to record. Mr. Bimal advises that 1.4 million to be used. No. 1.25 million. 1.25 million to be used as the. Mr. Bimal advises that 1.25 million to be used as the lease liability instead of 1.4 million, based on his belief that meeting based on this belief that company would most likely meet the government guidelines. However, now we are going to oppose this. However, IFRS 16 already states that present value of lease liability is to be based on fixed lease rentals and to not consider the variable payments. Hence, this shows that Bimal is not updated with his technical IFRS knowledge, proving his lack in professional competence. Oh, one thing I connected. So, professional competence we got to connect. Cool. So, next point we got. Let's take the next one. This will keep Gillam's finance cost to the minimum possible level to ensure that service components put by the bank are met. Okay. Another reason for advising another reason for advice to use the 1.25 million lease rental is to show lower finance cost within SOPL so that Gillen Co can meet the bank covenants. Now we're going to oppose. Okay, this shows that Bimal Co, rather than understanding or trying to update his technical IFRS knowledge, he is advising, he is providing, no, he is trying to rather than understanding or trying to update his technical IFRS knowledge, he is trying to understate expenses purposefully or purposely? What should be the word? Trying to understate expenses purposely. Okay, that sounds better. Technical IFRS knowledge. He is trying to understate expenses purposely to meet certain covenants. This also gives an indicator that Vimal Co may try to understate other expenses or overstate income to manipulate the accounts and meet targets. Hence, he lacks. What does he lacks? He lacks objectivity because he is being biased towards the company. So I always connect like this. Objectivity means biased. Wherever he is being little inclined towards doing something, objectivity. Whenever he doesn't know something, confidentiality. No, professional competence. These two things I can connect very easily. But this professional behavior, integrity, and all, I get confused always. So I, rather than making it a mistake, sometimes I avoid using that. Okay. Hence, he lacks objectivity. So that is sorted. Next, what we can say. This will keep Gillen's finance. Oh, that was over, right? Okay. Also, when you draft Gillen's sustainability disclosure, there won't be much to write about it all. I think that most content should be applying to building practices. As a result, you can access cheaper finance. Accessing cheaper finance is like fooling the investor or fooling the bank. So that is one point we can keep to the side. Other point we can say is about not talking much about the sustainability disclosures. So either you can try like two paragraphs or you can try one paragraph. Let's start writing it. Maybe the points will come to mind. Let's see. First, we can talk about this first sentence. Nothing much to write about at all, which means he probably doesn't know about IFRS, the sustainability standards as well. If I don't know so what is sustainability standard, then what I can don't write simply extra things about IFRS S1 and S2 if you don't know about that. Just write that sustainability standards are there, some disclosure requirements are there. So there is a lot of things they are telling that mandatorily you have to write all this so and so things. So he's telling not to write much, so he's not aware of that. If in case you're writing something about S1 and S2, make sure that you know the accounting standard properly. Don't go and write the wrong things over there. That will show that you also don't have professional competence. So either don't write anything, just try diverting the point somehow, or just write the topic and leave it there. Don't write the wrong points. Okay. So Mr. Bimal states that what is it? Sustainability disclosures says that sustainability disclosures may not have much points to be written within it. IFRS S1 and S2. Now let's assume that I don't know this accounting standard, so I don't want to mess it up over here. So what will I do? IFRS S1 and S2 are recent accounting standards published by IFRS in order to the uh, promote the promote the promote the in order to promote the disclosure no, in order to promote the transparency in disclosures related to sustainability matters. No, so that's enough. Okay, sustainability matters. This no, Bimel's point stating there won't be much points to be written, much points to be written, shows that he lacks knowledge or updated information about IFRS S1 and S2. This also further proves to show his lack in competence. So again, we brought up competence. So it's not wrong to tell it twice. If you have more indications, you can use it many times, no problem. So that is okay. What was the next thing he told? Most of the content should focus on the fact that they are applying sustainable building practice, but in reality they are not, so they are misleading information. So you can talk about that. uh, Bimmelco advises that most points should focus on compliance to sustainable building practices, but in reality, due to cost constraints, they are not following these. Hence, this shows that Bimmelco is providing misleading information within the financial statements to manipulate the users. Now, what all is broken over here? Integrity is broken, because it sounds like integrity is broken. I don't know the meaning. So, integrity is broken, let's say. Objectivity is broken. He's being biased. He wants finances, cheaper finances, so he's being biased. He is not faithfully representing financial statements, so faithful representation is broken. So, that's enough. Okay. This shows that integrity sounds nice. Integrity, um, what was the other one? Objectivity and fundamental principle, fundamental principle of faithful representation is broken. This manipulating user, you can just, since we have enough points, how many we have? One big paragraph, two, three, four, five, and you can just give a conclusion paragraph also, six paragraphs, and my paragraphs are a little big, so I can assume that I've scored the points. But again, I told that, right, 6 to 8 points if it's small loans. Since I have big paragraphs, I'm just sticking to six with the conclusion as well, because my 2 points and all sometimes would be there inside this. Okay, if you're breaking this even further, you can do that, not necessarily. Okay, and another thing is, this 2 marks also was for professional marks. They don't need actually 6 to 8 contents. That was just to keep in your mind so that you push yourself to get as much points as possible. Now we pushed ourselves to get as much as points, like 6 points, like six big paragraph. This much is not necessary to score that 12 marks. Okay, because your answer exactly was needing only 10 marks. That 2 marks comes out of the way how you write it and how you structure it and things and all. So the points we have written, don't think that, oh, I told initially 6 to 8 points. I wrote only 5 paragraph plus one for conclusion. So I didn't stick to my words. No, that was just a mindset to keep so that you try scoring enough points in your answer. Cool. All right. So, okay, we were telling about that. Accessing cheaper finance. So they show that they're trying to mislead information with finance and to manipulate users, which can be seen from Bimel's interest for obtaining cheaper finance. Cheaper finance. Okay, that's fine. Now, conclusion. They're asking, what should Shami do? What was the question asking? What is the requirement over here? Discuss the ethical issues arising from this and explain. Okay, that is very important over here. And conjunctions is very important. So you have to address that second part. Explain how should Shami proceed. So that conclusion was very important. If in case I didn't write the conclusion and I claim that, okay, I have big 5 paragraphs over here, not going to get 12 marks, because that conclusion was necessary and they're asking it as part of the requirement. So just repeating once again, wherever you have a conjunction in your requirement, keep an eye on that. You have to address all the parts. So how should Shami proceed with this? What was the main concern over here? Being professionally competent. So first thing Shami can tell is, go learn something about IFRS, get new SBR books or something, then get your IFRS knowledge updated. So first thing they can tell Bimel is, go and get your IFRS knowledge updated. Secondly, you have to mention about the updated policies, like what company is currently doing. You're not following the, what is that, government sustainability guideline, something like that. So that is not being followed, so you have to mention that as well. Still, if Vimalco is advising negative things, things that are not so right, then you can go approach a senior official, someone from the board of directors apart from the finance director, or maybe you can seek the help from ACCA. That could be like a final thing. Don't go and tell like the extreme things, go and complain to the police and ask them to arrest this person. Don't tell all that. That would be stupid. Just tell, the just the basic stuff. Just stay neutral in your answer. Okay. So you were telling, where did we start? Shami must advise Bimal to get training in IFRS and update their technical knowledge. Furthermore, this is he or she. She is concerned. Okay. Furthermore, she should she should convey the updated current policies current policies and practices followed by the company, especially with regards to the fact that Gillam Co is not following the sustainability building guidelines. Despite these advices, if Shamiko still feels intimidated or Bimelco provides wrong advices, Shami could get in. Shami could approach senior senior managers, senior officials at the board level, or seek help from ACCA official board. Oh my god. Okay. What is this? Oh, Bimel. It's not Bimel company, right? Intimate or if Bimel provides. Okay. All right. So that was our points for the ethical question. And before that, just like the previous one, we did calculation, then explain on that basis. So hope you have followed with all the techniques that we followed for this particular question. Here the main thing was not about the calculation bits. Here the main concern is about how to do the ethical question. So hope the tricks and the techniques that we use, like a backbencher, on how to score these marks, how to plan the answer, how to, when you get in stuck in situations, how to frame your answer to divert around that so you don't end up writing the wrong points. So hope all of these have been conveyed through this particular video, and hope you have understood how we have written as well, and hope that was not so difficult to think about. So hope this video was helpful in your preparation. Do let us know in the comment section or through personal messages how these videos have been helpful for your SBR preparation. Now we're done with section A. We have more to go. But before that, just like every other YouTuber would say, make sure to like, share, subscribe, comment, whatever other buttons are there, click all of that, and send these videos to other SBR buddies as well, whoever is preparing for their exams. Make sure let's everyone study together. Make sure that everyone reach to this video as well. Cool. So that's enough for the conclusion. Let's go to section B. See you in the next video.